Hello, everyone. We're going to let around a few seconds to let all the participants in. So we're going to start in a bit. So before we started, let me know how are you guys. You can reply everything in the chat box. So if you can hear me clearly, so please type yes in the chat box. Okay, great. So we're going to start now. So hi, everyone. My name is Chas, and I'm going to be your moderator for today. So our title of webinar today is Fundamental Analysis and Market Outlook. So what we have here is Alitricia Fung from a public investment bank. So today's webinar is brought to you by Bursa Malaysia and in collaboration with Public Investment Bank. So before we begin the webinar, so let me share you about the contest. Be a hashtag superstar video and you can win 800 ringgit. How to win it? It's simple. Number one, you need to create a 1-minute video. The title is What Inspire You to Invest? And then you need to upload your video on YouTube and then send the URL video to Bursa Malaysia, engage@bursamarketplace.com, which is right before 6 January 2023, and then 11:59 p.m. So your video will be published and presented on the page within 2 working days from the date received. So this contest is applicable to women only. So the top 5 video with the most like will each receive 800 ringgit each. So it's very simple and it's very easy for you to win. You just need to record and then you just need to tell what inspire you to invest. So please join the contest. All right. So before that, let me read the disclaimer before we begin the webinar. All right. Whatever we share in this webinar, it does not constitute legal financial trading or investment advice. And it also does not make any recommendations or endorsements regarding any oil product mentioned. So all participants, you need to seek independent advice or consult relevant law, regulation, and rules prior to relying on or taking any action based on the information presented. So Bursa Malaysia Berhad and also the speaker do not accept any liability for the information provided during the presentation and for any investment or trading decision made on the basis of this information. So, all right. So next, we're going to let me introduce our speaker today, Miss Alitricia Fong. Hi, Miss Alitricia.
Hi, everyone.
Okay. Ms. Alitricia has 22 years of experience in research and investment. So prior to joining a public investment bank, she was previously attached to Investment Bank, Fuang GBS Vickers, and also Nomura Malaysia, Wilmar International, and also Deutsche Bank. So she has like a lot of experience in the bank. So if you have like a lot of questions to ask in the Alitricia box, it's easy. You just type your question in the Q&A box. So after the webinar finish, I will read your question to Miss Alitricia. All right, Miss Alitricia, I will pass back the floor to you.
Okay, thank you, Charles. Let me turn on the screen. Have you shared the slides?
Can.
Okay. All right. Can you see the slides?
All right, Ken.
Okay. You already made an introduction of myself. So I have 22 years of experience in research and investment, working in numerous banks, locally and also foreign banks. Today, I will be talking about investment strategy and tools, the kind of job that we do as an investment analyst in the bank. We are known as the fundamental analysts, where we do a lot of number crunching, meeting up with companies, do a lot of readings about the stock markets, and what are the shares that we like and we don't like. And we write reports and disseminate to our clients, which include the retailer as well as the institutional funds, like your unit trust and your, the GLC funds like a PNB, or the private funds like the insurance companies. So I will just start with investment strategies. There are a few investment strategies out there. Basically, we apply these strategies to become a more informed, to make informed decisions, because a lot of times we have investors that would just simply buy and sell stocks without knowing the background of the companies and without reading and doing much research about it. So it's very important for you to know what are the things that we need to do before we decide to buy or sell or hold a stock, right? Market has become quite challenging. Economic environment hasn't been good the last 1 year, and previously we were all affected by COVID. So it was like a back-to-back problems. And last year or this year itself, and over the last 1 or 2 years, we have seen markets falling across most asset class. So I guess that equity is not spared. So we have seen decline in markets across all markets. Depending on your investment horizon, right? If you are a longer term investors, whereby you can hold like maybe 3 or 4 years or even 10 years down the road, perhaps now is a good timing to look at equity, because prices have come off a lot. Like FVM KLCI has been down year to date about 11%. So maybe you can start to relook and to think and to do more research on what are the stocks that you would like to buy and to invest for the future. So investment strategy, we have like a couple of investment strategies that fund managers would adopt. Momentum trading is where when you see prices of certain stocks rising with a high volume, you may want to take a ride on it. And when you buy those stocks in a heavy momentum, chances are you may make some profit by adopting this momentum strategy, right? It's an active strategy where you have to be monitoring the stock market constantly, and those are what traders would normally do, right? In terms of buy and hold, it's a lot more passive, when you make your research, you have done your research, and you decide to buy a certain stock, and you hold. You don't look at the prices, you don't do anything about it, and if you tell yourself that you are giving yourself a 2 or 3 years down the road, then when the time comes, you may want to review your portfolio, whether you would want to still hold or you will sell stocks. So these are, buy and hold is very passive, where you just need to do your homework at the beginning, and later on you just hold the stocks for a couple of years. Indexing is where you do not know what a stock to buy, so you will try to emulate stocks that make up of a certain index or mutual funds index, or even exchange traded funds. So for instance, FVM KLCI 30 stocks, you may want to like buy that 30 stocks if you think that the overall market is undervalued, and you don't have an idea what are the stocks that you want to buy individually, but you buy a group of stocks that make up of the index, right? That is also can be passive and active, that you may still need to monitor the movement of the index. A pair trading that we also adopt is where you like a certain sector, but there are many companies in that sector. You pick perhaps like 2 a pair, and you are comfortable with, and you know the company inside out, and you just trade between these 2 stocks. So if, let's say, for instance, you take Maybank and CIMB as a pair trade, if there are certain information comes out on Maybank that is positive, you may just buy Maybank and you will sell CIMB. And likewise, when things goes otherwise, then you may want to sell, and you will just flip-flopping between the two companies that you are comfortable with. So it actually helps you because you don't need to monitor too many stocks in the whole entire portfolio. So it's the market timing is also important, and decision making is also a skill that you need to have when you do a pair trading. Value versus growth. It means you look at value stock. Value stock basically means that the stock may not be good fundamentally, but share price has fallen a lot and it becomes cheap. So there are companies that are cheap, but they may not have a good prospect in terms of earnings growth or dividend growth or anything else, but is very cheap, right? How you look at whether a company is cheap or expensive, later I will talk about it, and what are the ratios or valuation method that we use to determine that. So a value versus growth, like if there is no strong growth in the market or no catalyst, you may want to look for value stocks instead of growth stocks. And growth stock, like in market like right now where interest rate is rising, it's very difficult to find growth stock because growth stock we need to borrow money, right, to invest and to expand the business. So you may want to, shy away from growth stock and focus on the value stocks, hoping that you will get upside when market recovers. In terms of dividend versus growth strategy, you choose between dividend stock that able to generate cash flow, right? Most of these dividend stocks that we talk about, they are companies that consistently generate cash flow. Examples would be like your power company, right? Telco to some extent, people like us, we will have our package and our plans that we need to pay every month. So consistently, telco company would be able to receive cash flow, right? And then concessions like your highway, toll roads, right? Those and REITs as well. These are the companies that are able to generate dividend in a consistent manner, and you may want to invest in those stocks. And it's passive because it's low risk, and it's normally businesses or company in the dividend space, they are matured companies, right? So they don't invest heavily into new businesses, and they just focus on what they do well. In fact, even some of the FMCG like consumer stock, like Ajinomoto or your Panasonic, those are also considered dividend stocks. Dollar cost averaging, you basically when you buy stock at a high price, and of course there's no guarantee that you won't fall. So when you fall, you may want to buy more to average down your cost. So this is also another strategy that some fund manager would use in order to reduce the unit cost, hoping that when market recovers, you will see capital upside faster. Contrarian investment is when things may look bad, market condition is weak, like maybe a couple of months ago, when everything was just so bearish, every central banks were raising the interest rates and causing equity market to collapse and even bond yield to increase. If you were to buy during those times, you are actually considered a contrarian because everyone is negative in all asset class except US dollar. So if you had adopted this contrarian investment strategy maybe 2 months, 3 months earlier, you probably make quite good gains now because things are just looking bad, but you just adopt something that is opposite of what everyone is thinking, right? Sometimes you do get value out of it, and for someone who have done it, it will be like sitting on good profit currently because example would be like the tech stocks. There have been a massive sell down on Nasdaq, and even in all the tech companies in Malaysia, they are easily down like 30-40%, but now they probably recover more than half of it. So if you have adopted contrarian investment strategy, you will be happy, today time. So this is one of the strategy that some fund manager would also look at. And after talking so much about this investment strategy, how and what are the tools that we use in order for us to pinpoint and to identify what are the stocks that we will buy or sell, we like or we don't like, or to stay away. So in our line of work, generally there's a two broad analysis that we will do for us to identify stocks. Fundamental analysis is one of the main one, and this is what myself and my colleague will do in office, every day. We analyze the company, and one of the things that we analyze is all the financial statements. Meet up with companies to understand what are the thought behind investment or growth strategy that companies adopt, and why, and where are they going to expand to. So it is all very fundamental, all at the base of what that support a business. Technical analysis is you don't bother so much about the fundamental. You just look at the price, the volume, the momentum, and you just buy on those stocks based on the indicators. And for myself, I'm a fundamental analyst. I don't know much about technical, just very little about it. So I will still talk about it later on after fundamental analysis. So, which I mentioned earlier, what is fundamental analysis? We study the underlying factors, financials, management, industry, and the prospect of a company, trying to figure out what is the value of the company, right? It can be a top-down approach or the bottom-up. The top-down meaning you look at the big picture, like the economic environment, the industry that dictates the company, and all the way down to the company level, or a bottom-up where you look at the people that run certain businesses, and you like those people, and then you work yourself up, or you like certain product like consumer, and then from there you move up to identify what are the companies that you like. So we examine, or we look at the quantitative as well as the qualitative aspect of the company. Quantitative being numbers, qualitative is, example, the track record of the management. Have they been delivering their numbers in the past, or do they have a bad track record, like always like overpromise? So those are the qualitative part of it. And how do we go about doing all this? Is we do a lot of reading, and we talk to a lot of people to find out, to identify all these aspects. So we observe and we assess. So for instance, a top-down approach, let's say you read the newspaper, there is a big project announced by the government, for example, Singapore, Malaysia high-speed rail. How would it affect the industry? So when you talk about rail project, you will think about construction, right? You need construction company to build the rail, right? And then you look at how many portion of that will be allocated to local players or foreign players. So if you also invest in overseas market, so maybe there are certain players that out there that could also partake in this project. Or if you're just a local, then you just identify what are the local construction company that will potentially be awarded the project. And apart from construction alone, of the project infrastructure alone, you may also want to look at land acquisition. Along the way there will be property companies that will benefit from this project, or there will be suppliers like the steel, cement, earthwork, piling construction company that will benefit from as a subcon. So you start from the big picture, and you try to move all the way down, right? And then you will try to identify, okay, if I think, or I like the spillover effect to property companies along the railway, and what are the property companies that are involved? So it can be a sign group, sign derby, or some plantation company may have land that may be converted into construction or property development. So you try to like analyze, step by step. And then the cement company, what are cement companies that are available in Malaysia, Lafarge, and then Malaysian Steelwork and the earthwork specialists like Advanced Corn, Ecompal, and then of course back to your railway company, Gamuda has the experience in building railway. So it's a lot of information and you need to filter and think, and how do we know about all this is basically through reading and meeting up with people in the industry. So I mean, for us, we have access to companies, we attend briefings, we can arrange meetings to meet up with management, senior management, and that's the the good part of, or the interesting part of our job. But for average investors, they may not have access to this means. They can't be like just calling up a Gamuda, say, hey, I want to meet up with you, sort of thing. So perhaps for retail investor, for instance, they can pick up some of the analyst report, you can read. People like us, we write about sector report, and we write about individual company report, and you can rely on a research report, and you can also read, newspapers and let's say The Age. They have a lot of information, and that's how you help you to broaden your how to say, your knowledge in one particular industry, and then you try to build more interest and move on to other sectors as well, right? So which I mentioned earlier on, people like us, analysts, fund managers, we meet up with companies, and we can even visit their plant, like manufacturing companies. We can request to meet with the factory manager, try to see how the production line is like, how they run the business, and that's how we do our assessments, right? Um, and sometimes we arrange like group meetings, between a few companies in the same industry to get together and to have a dialogue and discuss. So that's how we come up with our analysis and assessment of certain industry, certain companies. And for retail-based investor, which I mentioned earlier on, you can engage with analysts and fund houses, if possible, before you make an investment decision, rather than when you see the title in the paper that, oh, Malaysia is going to build a high-speed rail, and you just simply buy some stock in the construction. You may end up buying the wrong stock, that if this company is not how to say, expertise in this area. So how do you know? Is by reading reports and papers and online, for you to identify and find out more about any particular industry. So reading is one of the main thing or passion that people like us must have. If you don't read, you don't talk to people, you won't know information, right? So these are the one of the criteria for analysts. And then when we get all this information, and then what we do, we will maintain a spreadsheet that we key in all the numbers. We try to come up with profit and loss statement. We try to come up with a balance sheet and the cash flow statements. So these are all very technical. I mean, business students or accounting students will know what all this means. So when you open an annual report, what you see is historical numbers, things that happened in the past. So for people like us, we try to make projection what happened in the future. So we will maintain a spreadsheet, an Excel file, where we key in the historical number, and we will also try to forecast the future. And how do we forecast the future is by what I just said earlier on, when we meet up with management, we see how the plant runs, we see how the processes are done. and then we forecast. For instance, it's like revenue. Revenue is for a manufacturing company. It's very straightforward. It's just price multiplied by the sales volume. So how much sales volume they can grow from the historical number that you can find in the annual report. To derive that number, whether it's a 5%, 10%, 20%, you need to talk to management. So they will guide. They say that, oh, we are very aggressive. We want to expand or we want to export to China, US, or whatnot. So you come up with a conclusion that, hey, maybe 10% volume growth will be fair. So you plug it into the model, and then you come up with all this. This is just a revenue number. Then you have to forecast the cost, forecast the margin, and then that's how you get your net profit, and then you get your balance sheet and your cash flow statements. So the three things that we have to forecast is profit and loss statement, balance sheet, and cash flow. So what are the purpose? The purpose is which I mentioned, is to identify or to come up with an intrinsic value. You may see, let's say, for instance, just come up with a name. Let's say Genting. Genting maybe it's 5 ringgit today. You try to, it's today's price. It's not a forward price. So people like us are trying to come up with what is the future 12-month target price for Genting. So we did all those financial statement analysis that we have done to come up with an intrinsic value. So if right now, if Genting is trading at 5 ringgit a share, and I did all this analysis and I come up with 8 ringgit a share. And what does it mean? So it means that 12 months down the road, Genting could potentially trade up to 8 ringgit. And what do you do right now? You buy the stock because it's only valued at 5. So you buy now, and if you have a 1-year horizon, then hopefully your analysis is correct. Genting share price will move towards 8 ringgit, and you may be able to take profit. So you have the red line, like intrinsic value over time. Market price will go up and down, right? Up and down the intrinsic value. So when it goes above the intrinsic value, it means the sell signal. And when it's below, you will buy the stock. Yeah. How do we come up with this number? So we do our forecast of all the 3 financial statements, and end of the day, like how do you get 8 ringgit? So there are a few concepts or ratios that we use to derive that 8 ringgit. So the common one will be this called price earning ratio, that we give a multiple on the earnings per share, or price to book value, where it's popular use is mostly used for financial stocks. We put a multiple against the book value per share, and you can also forecast the dividend, and you can get your dividend yield. Anything that is above your FD rate is a good stock or a good investment to look into. Discounted cash flow, we try to forecast the cash flow of the company. I would say among all this, like even enterprise value over earnings, EBITDA basically, it's the top 2 will be the most commonly used. Dividend is usually like a supporting ratio. Cash flow is mainly for businesses that generate cash in a stable manner, which I mentioned earlier on. Is like your concession, your power company, your telco, your REITs. You can use a discounted cash flow method. So otherwise, the rest of it, like your manufacturing, a lot of time consumer stocks, right? You can adopt a PE ratio to value the stocks. What is PE? We call it PE, means price to earnings per share, PE ratio. It is the most commonly used fundamental analysis. So we try to forecast the earnings per share of the company, where forward year we come out with the net profit, and we divided that by the number of shares, to get us the earnings per share. And from there, we multiply it by a multiple. And how do we get the multiple? The multiple, it can be comparable, where back to example, the construction company, you, let's say you do an analysis on Gamuda, and you can do a compilation of what are the PE ratio that all the construction stock are trading at. And let's say the multiple that you get on average is 10 times per share, and Gamuda is trading at 6 times per share, for instance, then you may want to apply a 10 times over Gamuda's forecasted EPS, earnings per share, to get you the target price. So all these things, we can't get it, just like that. I mean, in office, we have this thing called Bloomberg that allow us to extract information from all the companies, right? For us to come up with a comparable table. So that's how we come up with a target price. I mean, of course, there's a lot of limitation because when we do this kind of forecasting, there's a lot of assumptions that we make, and assumption can be right, can be wrong. Again, it is something that happened in the future. Nobody knows whether it will happen or it will not happen. So the limitation is again is how accurate is the forecast and how reasonable are the assumptions. And price to book is multiple over the book value. So you look at the balance sheet. Book value is basically the equity value of the company divided by the number of shares. So for book value is essentially your shareholders' equity, your asset minus the liabilities. And we mostly use this method for companies in the finance industry, right? Because you can't really look at the earnings so much because for banks, it is the asset, which is how they generate margins or interest from their assets, which is their the money that they gather from depositors. So balance sheet is more important rather than looking at profit and loss statement. Dividend yield, previously I already talked about it. So is looking at the annual cash flow of the company and trying to see whether there are companies that would pay almost 100% of the earnings that they make. If they earn 1 ringgit every year, they will pay 1 ringgit as dividend. So these are the matured companies because they don't need to retain capital for future investment. So most of the food company, they have very high dividend yield. Even gaming stocks like your 4D companies like Platinum and Sports Toto, they will have like 70-80% of their earnings will be distributed as dividend. So those stocks, they are not cyclical in nature and they have strong cash flow, and they would like to, and they have limited investment. So whatever they earn, most of it will be payout to shareholders as dividend. So like how you compare that against your FD. So it's like a no-brainer. If I don't want to do any homework, I don't want to do any reading, I don't want to do any analysis, I just put my money in FD. Right now, FD maybe a year can give you 4%. So you may want to look for stocks that will give you more than 4% dividend yield, better than FD, right? So yeah, a lot of stocks. I mean, not. I have example here is Berkshire Hathaway and Coca-Cola. This is I mean, they are the overseas stocks. It's not nothing to do with Bursa, but just an example. For the last 10 years, they've been paying like 4% yield, regardless, what is the market is doing, whether it's up or down. So if you just put your money in Coca-Cola or Berkshire Hathaway, you will have no problem. Your money will generate extra interest for you every year at 4% for the last 10 years. Discounted cash flow is one of the trickiest one because you have to forecast the cash flow. Cash flow is a lot more assumption that you need to make compared to your net profit, compared to forecasting a profit. So but sometimes it also easy because there are certain businesses that have like tariff rates. Like for instance, your power company, your Tenaga, they already agreed the rates with the government, how much they can charge. So you can forecast cash flow from there for the next 15 years. So we will do that as well. So for those companies, we forecast the cash flow and we try to discount the future cash flow back to the time zero to identify what is the cash flow per share or the operating cash flow per share of the company. So a fundamental analysis in a snapshot, we look at the business nature or the industry structure, right? And we look at the management track record and corporate governance issue. There are companies that they may sell very good growth stories to you, but if they have issue in terms of corporate governance, trustworthiness, whether you can trust the CEO or whether he has a bad track record, then you may want to avoid this kind of stuff, right? Other qualitative issues like the products that they sell, are they like are they outdated? Those are a lot of other things that you may want to look at before you want to buy the stock. And one important thing also, as an investor, you need to, before you come up with all this, or you spend time doing all this analysis or reading on research reports, you need to know yourself, what is my investment horizon, right? I have, let's say, I don't know, 50,000 cash, say for instance, and I don't need it for the next 5 years. That is your investment horizon. So your capital is 50,000, and you want to invest it over the next. You don't need the money for the next 5 years. And 5 years later, you will review a portfolio and you may sell when you need the money. So you must first need to know what is your capital, and your investment horizon. 5 years, 10 years, or how many years, right? And your risk appetite. Can you accept risk? If let's say tomorrow, or let's say this month, and US decide to raise interest rate by 75 basis points, market is going to collapse, 4 or 5% one day. Can you handle this kind of risk? If you can, which means that you are very high, you have high risk appetite. If you can't, then you have low risk appetite. So in a general term, different investors will have different risk appetite and horizon, right? But generally, based on, let's say, age, right? A young investors, for instance, a student may have high risk appetite and their horizon could be longer because I hope they don't need money for the next 10 years. I don't know, right? If they are young and they are earning money and they can afford to invest longer. So maybe the young investor has higher risk appetite and they are longer horizon. This is supposed to be a women's campaign, right? So for instance, a housewife, right? I assume that in general, right, they have low risk appetite and their horizon, depending the purpose of the cash or the purpose of the investment, whether they want to invest for the children's education or to go on holiday, or to buy something in 2-3 years down the road. So you need to know all this and ask yourself before you invest, because there are stocks that are high risk, especially like for instance the growth stock. If you're low risk, you have low risk appetite, you should be staying away from growth stock because things can turn ugly, in a short period if the investment strategy fails. See, so before you do all this, you need to know your investment objective and horizon and risk appetite as well. Okay, that is technical analysis, which I explained. Fundamental analysis. Now we move on to technical analysis. Technical analysis is actually a lot more simpler right? You don't need to read and do so much research and go out and meet people and talk to people and all that. You just need to look at the charts, and you may just buy a charting book to read on the tools when this thing happen, what does it indicate, and what are all these things, morning star, moving average. So when you see all these indicators, what does it tell? Is it a buy signal or a sell signal? So it literally looking at the past market data, price and volume, and trying to project the share price from there, right? And share price is basically determined by supply and demand. The buying support and the selling pressure. You don't bother about the management. So and also study on the psychology or the behavior of the market, which made out of human psychology. It's a lot of patterns involved, so it's simpler. You only need a textbook, a book that to teach you what are the indicators out there, and then you look at the price chart and hoping that you can pick a target price of the stock. So a lot of time I noticed that students love this technical analysis. I don't know why. Maybe they like things to be the shortcut, rather than putting the effort to read and to study and to do the homework. Technical analysis is very fast and quick. So throughout my experience, students will generally use technical analysis to make projections. So for instance, like this price chart, so it can move like in a channel. So so you got this like uptrend channel, and then the sideway, it doesn't do anything, and then you uptrend again, and then there's a downtrend. So all these arrows up and down, where those are the indicators. So based on those indicators and all this black bar and the white bar, you are able to identify the signal whether to buy or to sell, right? And you don't even bother to come up with target price. In fact, I mean fundamental valuation or the intrinsic value. Your target price is based on what was the last high, and that would be the resistance. And when when the share price fall, you look at the resistance and what was the previous low, and that would be the support. And now, economic environment, which I highlighted earlier on, is very challenging, right? There are a couple of things that is affecting the market. Global inflation is the key. When you have central banks across the globe raising interest rate, which means the access to capital will be more expensive, and that will curtail growth stock. They can't borrow money, and if they were to borrow, it's going to be expensive. Can the new businesses or new earnings coming in able to cover the increase in interest costs? So these are the problems that we are facing right now, and the rest of the world have somewhat passed the COVID downturn, except China. But China is one of the big economy, so it's a concern, and the current issue right now is like the zero COVID policy, whether China will make do without it or to relax. So if they relax, it will be positive to Asia market, because China can the economy can start to run and produce, and because now a lot of plants are being shut down, so people have no income, they can't move around, they can't go on holiday. So these are the things that affect China, and China is a big economy, and it's a big sector, a big country that we have to watch out. And also the ongoing Russia-Ukraine war. So when we had the war, that was one of the main trigger point for the suffering that we are going through right now, high cost of food, because Russia produced a lot of commodity, a lot of food commodity, and also fuel. So when there's a disruption to supplies, prices will go up. So right now, these are the four key determinants that is affecting the economy and also the stock market. So we will have to constantly be aware of what's happening in order for us to identify or to figure out what's the next step, whether to buy, to hold, or to watch out, or to wait for opportunity. Earlier on, I mentioned dividend stocks. So I have compiled here a list of dividend stocks. This is not based on our forecast. It's just something that I pull out from Bloomberg of stocks that are generating higher than FD rates. So you can see most of the companies are consumer stocks because consumers are, which I say, very mature industry, right? They have cash flow, and most of the time they'll pay 70, 80, even 100% of their earnings out as dividend. So, BAT is up on the scale 8.8%, and yeah, you can see mostly these consumer gaming stocks, which are the NFLs, the Sports Toto, and the Magnum, and some commodity stocks as well, right? Mostly consumer, for the reason that I mentioned earlier. These are public investment banks forecast. The team of us, we have 11 of us. We cover all the stocks, and we derive our target prices, and also basically these are the stocks that we recommend buy to our customer or our clients. So we have large cap, which are mostly the banks and the power and telco and Genting in there, and mid cap we have mix, right? Some tech stocks. So these are the small cap. Okay, you can see the EPS and PE. Those are the things that we look at. Now highlighted there eNature. Well, eNature, since that this is a women campaign, eNature actually focus very much on women business because they sell beauty products. We have a buy on the stocks. We think that they are expanding into Vietnam, and also basically this is a Body Shop, right? So the next quarter we should see good numbers coming in because of the seasonal factor. Your Christmas coming, holiday season, so perhaps earnings will come in stronger for eNature, right? We have 66 cents as our target price, and market price is 54 cents right now. Okay, so in conclusion, trading or investment is you need to do your homework, but end of the day is still a lot of art involved. It's not so much of science, right? And market is not always right, and there is opportunity for us to extract inefficiency and to make money from it, right? And beating the market is still possible if you have the skill, which I talk about in this session, where you did the analysis and did the reading and meeting up with people, and with the discipline, follow your investment horizon, follow your risk profile, and with some luck, hopefully you can make a return from this market. Yeah. Okay, that concludes my talk. I guess just we are back to Q&A.
All right. All right, thank you so much for the sharing session. So we are back in the Q&A session. If you have any question, please type your question in the Q&A box. So I will read your question in a bit. So in the meantime, let me share my screen back. So as our first question, where you can find out on the company financial report?
Financial report. Okay, the first starting point is the annual report. You look at the annual report, that will give you snapshot of the last 2 years, the current year, and the last 2 years record. So if you want to go further back to know more about the history, the historical, whether this company has been delivering, and this company did it disappoint? Is the number or is the profit consistent or not, or has it been growing? You will need more than 2 years. So let's say right now is today is 2022. So if a company with December year end, you will want to look at their financial year 21, 2019, 2019 and 2018, maybe the last 5 years. So you will need like 3 annual reports to get those numbers. Right.
All right, for next question, what is the correlation between KLCI and US stock market in general?
In general, actually it's funny. In Malaysia, it's like we always joke this among ourselves. When US market fall, we will fall. When US market go up, we will still fall. For other regional markets, it's quite straightforward, right? But the problem is Malaysian market has our own problem, right? We all know we just came from quite a, how to say, messy election, political landscape, industry structure landscape and all that is quite different from the other markets. Usually when US market goes up, the other market will also get the same vibes and same sentiment. But for us, it's not very obvious. But of course, if market is going up, we will also benefit. But sometimes you need to know why US, let's say, is falling. For instance, there were a point of time where investors were worried about US, so they were pulling out from the US market. It was oversold, I guess. I think it was oversold, so they were selling. So when we won't call it investors, when the institutional funds, when they sell US market, the US shares, they will get cash, right? They will get the capital back. And what would they do with the capital? So there were a point of time where they say, the investment profession is saying that, the growth will be in Asia. So they will redeploy the US proceed to Asia market. So when US was falling, Asia market was up. So you still need to know what are the factors that drove US market up or down, and to understand what will be the repercussion on the Asian market.
Okay, for next question. Intrinsic value so tricky to determine and no one can calculate it accurately. So any other way?
The other way is actually the technical analysis, right? You don't need so much of headache, paper, computer, and anything, going out to meet up with management. Technical analysis. That's why, which I say, like the young investor, they love and they prefer technical analysis, because technical analysis. Let's say back to the Genting example. Genting example, say 5 ringgit right now, and let's say the intrinsic value of all this assumption that we make, we get 8 ringgit. But what if Genting has never traded up to 8 ringgit? So it's quite far-fetched, but we make our projection. Let's say Genting expand into Singapore at a time, or gone into US, UK. So maybe that's why you can look at historical, the earnings growth will be much stronger than in the past. But for technical analysis, they will look at what price it has gone up to previously. That will be the immediate target. So let's say now it's 5 ringgit, and previously Genting have gone up to 7 ringgit before. So 7 ringgit is more reachable or more acceptable than the 8 ringgit. So that's why, technical analysis will be the next best alternative to fundamental.
Okay, next question we have here. What's the local market outlook?
Local market outlook, our in-house target is for CI to reach 1580. I don't know what is it today. 1580 by end of the year. It's only a month to go. We haven't come up with our next year target yet. Now is I believe that today we will have a cabinet lineup coming up. So it's very crucial that we need to know what are the people that our new prime minister will put in. If we see a lot more technocrats, business savvy people that running the government, it will be positive, right? Because a lot of time, in Malaysian market, we have issues when we talk to investors overseas or anywhere else. It's like there's always a mix between politics and businesses objectives. So it's very hard to like certain sector because there's always some noises behind the scene. So if we still unsure for now, we need to look at how the new government able to steer Malaysia out of this economic challenges which everybody is facing, including us. And from there, then we will know if it's more business oriented, then we know that it's all driven by economics, not any other unknown, objective that they have in mind. So we were, I mean, earlier on it was negative because of course we have our own problem, and the global economic wide is also in a downturn. Next year people are looking at recession maybe. So next year we still be weak, but which I say that if you don't have a very short investment horizon, like 2 months, 3 months, that kind of thing, I won't know what will happen in 2 months or 3 months time. But if you have a longer investment horizon, like 3 years, then perhaps it's the right time for you to actually buy equity right now, right? Because after 2023, if there's no more pandemic or whatnot, market should be recovering. And equity market is always ahead. It's a leading indicator. Before the economic starts to recover, equity market will see recovery first.
Okay, last but not least, this question is especially for women out there. So what's your investment advice for young female graduate, also for working professional women, and also housewife and female retiree?
Well, just now I briefly touched on that. It's still back to your risk profile, right? A retiree will be extremely risk averse because they can't lose their capital, right? And because they are not generating income anymore. So I would say dividend stocks, right? Dividend stock will be the most risk averse.
That one is for long-term investment, is it?
Long-term investment will be the growth stocks, right?
Yeah,
the tech stocks, which have been dashed down, badly the last 1 year or 6 months. And you won't know what's going to happen. We have all these semicon shortages, but you know that digital is here to stay. Your handphone, your laptop, your devices. So the prospect for tech is there, but it's very volatile. It can drop 20-30% in a year. So if you have a longer term horizon, like 10 years down the road, if you are young working women, adult, you may want to look at all these higher risks that will give you longer return, a higher return in the long run, right? Those are in the middle, like you are matured working women, or maybe your kids very young, and maybe I don't know 5-10 years down the road, 5 years maybe they will enter university and you need education funds. So you can have a mix, right? Some dividend stocks, some growth stock, right? Value stocks. Right now there's some value stock that you can look at. Right? A value stock, that the one thing that comes to my mind is like some of the growth stock. During pandemic they were so expensive, and now it collapsed completely, gone.
Yeah.
They recover a little bit. But yeah, so those are example of value stock. You don't see it anymore. I can't see another pandemic happening, but
who knows?
Yeah, we won't know, but what I can anticipate, there is no pandemic yet anytime soon. So the fundamental is not that great, but the share price has gone up so much, gone down so much. So maybe you want to look at some value stock. So I guess in the middle you will need to have a mix of both.
So how about unit trust?
Unit trust, yeah, you can. I see. Okay, unit trust is when you don't have time to manage, you will have to pay somebody to do the management for you. So for unit trust, you have to pay 4%, 5% management fees and some joining fees. And you let the professional, those professional will be our client. Actually, we service the fund manager, and they will read our report, and they will manage your funds, and hoping to make return from there. So if you don't have time, then yeah, by all means you can buy into unit trust, and you just pay annual fees of 4-5% a year.
All right, I think that's all for now. So thank you so much, Miss Altricia, for for answering all the questions given. So before I ended this webinar, let me share you again about the contest. Be a hashtag superstar video and you can win 800 ringgit. It's very easy for you to win this. What you need to do is just you need to create 1-minute video that what inspire you to invest. So this contest is highly for women out there. So this applicable for all women. So what you need to do is that you upload your video on YouTube and then you send the URL video to Bursa Malaysia. Engage at bursamarketplace.com. The deadline is 6 January 2023, 11:59 p.m. So your video will be published and presented on this page within 2 working days from the date received. So, and then the top 5 video with the most like will each receive 800 ringgit each. So the term and conditions apply for this contest. So, all right, thank you so much for all the participants who are joining us today. And then thank you so much for Altricia, Miss Altricia, for joining us and then for giving a sharing session and your opinion on this investment and give advice to all women out there. All right, thank you so much, everyone. Have a good day.
Thank you.